All right, everybody, good afternoon. Welcome to today's webinar, How to Master Moving Averages. My name is Jerry D'Ambrosio. I'm the manager of educational content with VectorVest. I hope everybody's doing well. It's a beautiful, hot, sunny day here in the Charlotte, North Carolina area. I know it's pretty hot in a lot of places here in the U.S., but I do want to welcome everybody joining us, anywhere. If you're joining us from Canada, the U.K., anywhere in Europe, welcome everybody. I do have Mr. Stan Heller with us today. Stan is our VectorVest Canada consultant. Those of you that live in Canada, trade the Canadian market, know Stan very well. He will be in the background today, guys, answering any questions that you have. So I have a ton of content to cover here. So if you have any questions along the way, I try to answer them as we go. I will save some time at the very end to answer some of the more common questions. But please, if you have a question, ask. Stan will be here in the background answering all the questions that you guys have. Okay, so first off, if you do have a question, use your GoToWebinar control panel there. I'm sorry, I want to welcome everybody joining us via YouTube as well. We have someone manning the chat room in YouTube, so if you are joining us via YouTube, please ask a question, and we'll get your questions answered for sure, whether it's through the course of the presentation or somebody in the background answering the questions. Okay, let's see here. So if you do have a question joining us via GoToMeeting, just enter a question for us, click on send. If you can't see this control panel here, just click on the orange arrow in this kind of vertical rectangle there. That'll open up the question box. If you happen to lose sound or video, just log out and log back in. That seems to be the best way to remedy the situation. If I'm coming through to somebody, I'm coming through to everybody. And the only thing that it just depends on your internet connection, your speakers, do you have your volume turned up, this or that, okay? So if everybody's ready to go, let me know in the chat box. Get familiar with that chat box. Just type something in just to let me know that you guys are all ready to go. We're in for a really good webinar today. We'll be together for about an hour. If you stay with me until the end, I will share a copy of today's slides. I think this is really going to help. We're going to be talking about moving averages, and we're going to be showing a lot of examples and going through a very, systematic trading system, a complete trading system. So I think the slides will help you guys moving forward. Fantastic. Don says Don is ready. John is ready. Mel says good to go. Ronald says good to go. Eddie says I hear you even in Belgium. Awesome. Awesome. Gary says good to go. Fantastic. So, by the way, in terms of the slides, again, we're going to be together for about an hour. So at about, let's say 12:50 or so Eastern time, 50 minutes from now, just somebody remind me. Just say, hey, Jerry, don't forget the slides, and I'll put them in the handout section of your GoToMeeting control panel. And those of us joining us, via YouTube, you'll get the slides as well once we're finished here today. Okay? So what we're going to cover today, just a couple of key concepts here in terms of moving averages. Moving averages remove the noise and define the trend to help us predict if the stock will continue to move up or down. I always hesitate using the word predict. We've never been in a company or just an organization that claims to predict anything. There are people that do that. We look at it more in this case, just in terms of moving average anticipation. We want to anticipate if the stock is likely to continue to move up or down, and moving averages are a great way to do that. Sometimes if you just look at price, right? Just put price on a graph. Sometimes it's hard with the naked eye to make sense of certain situations, certain points in time when you just look at price. Moving averages help eliminate that noise, and they help us identify true direction, true price direction. Now you can apply moving averages to any indicator. Relative timing, that's a VectorVest proprietary indicator. We have a technique where we do that. We apply a moving average to relative timing just to kind of again eliminate the noise and smooth out price action in a way that is a little difficult with the naked eye. So what we're going to cover today, 5 key ways to use moving averages. And I'm going to teach you guys a very simple, complete trading system to pinpoint high probability entry and exits. And it's called the Ema Squeeze swing trading strategy. It's a multiple moving average trading system. Now, by the way, I'm going to talk more about this later, but we do have a brand new, I wouldn't say brand new, but a new launch here of a course called Mastering Moving Averages. I'll talk more about that later, but we do start here in a couple weeks. So why are moving averages so important? They provide a simple means of smoothing price action, making the trend and momentum more discernible. Not only are moving averages a powerful technical tool on their own, but they also form the basis for other technical indicators such as Bollinger Bands, stochastics, and the MACD, to name a few. Professional traders, Larry Connors, Linda Ratchke, Charles Schaap, Steve Bigelow, just to name a few. These guys are professional traders. They've built entire trading systems using not only these certain indicators here, but moving averages as well. All right, so what we really want to identify is reliable, profitable, high probability trades using moving averages. So traders with a short-term perspective, like swing traders, and that's really what we're going to talk about today, for the most part, especially when we, when we go through the Ema Squeeze trading system. It's a swing trading system. So what's a swing trade? A swing trade is a trade that you take with the expectation that you're going to be in it for days to weeks. Now, sometimes longer. I think the average holding period, though, for a swing trade is anywhere between a few days to a few weeks. Sometimes it can be longer if your predetermined exit criteria has not been met, right? So if you set a profit target, or if you're using an exit strategy that hasn't been reached yet, then you're going to stay in the trade. And for the most part, it's good. However long it takes to get there is how long it takes. Sometimes it's a few days, sometimes it's a few weeks, sometimes it's longer. Okay, but a swing trader tends to prefer exponential moving averages, EMAs, over simple moving averages, because EMAs move closer to price, so there is less lag. Just so you know, moving averages are lagging indicators in and of themselves. Okay, they're not leading indicators. They're lagging indicators no matter which which moving average you use. A simple, EMA, or a weighted moving average, they're lagging indicators. Okay, as you can see from the price chart at the bottom, the green line, the green moving average, is a 13-day EMA, and the red line is a 13-day simple moving average. When it just says MA there, that just simply means a simple moving average. A simple moving average, in this case, because it's a 13-day look back, every price within the last 13 days is weighted the same. It's a simple moving average. You take the closing prices for the last 13 days, add them together, divide them by 13, and that's your simple moving average. EMAs are a little different in that the EMA holds more weight to the more recent prices. Okay, to the more recent prices. So if you're a trader, that's pretty important to you. You want more weight. You want a more reactive indicator because of the holding period and the type of trading you're doing, right? Because your holding period is rather short, pinpointing entries and exits is really important. So the closer the moving average is to price, the more reactive it is going to be to help you identify better buy and sell signals. As you can just clearly see, again, the green line, so let's just look at price. So price fell, right? Found a bottom, began to rise. The 13-day EMA was much more reactive to that rally than the simple moving average was. Okay, you could see I guess the bottoms, right, of both moving averages, with the 13-day being here much earlier to the price bottom, and the exponential moving average, and the simple moving average didn't really start turning the corner until this area here, well after price began to rally off of that low point. So EMAs are what's preferred if you're a trader. If you're an investor and you're using moving averages like a 50 or a 100 or a 200, simple moving averages work just fine, and we'll look at the difference in a moment. All right. Some key concepts, 5 key ways to use moving averages. Number 1, define and invest with the trend, whether it be up or down. And they also help us excuse me, determine how strong the trend is. Okay, the steeper the slope of the moving average, the stronger the angle, the stronger the trend. Okay, they help us identify buy and sell signals as well. So you'll know when is the safest time to buy and when to consider selling. Now that can be a couple of different ways. Moving averages, you can use moving averages to help identify buy signals in 2 ways. Well, in a couple of ways. Number 1, retracements off of certain moving averages. So let's say a pullback towards the 50-day moving average, price settles in at the 50 and then retraces from it. That'll give you, that's a nice buy signal. Moving average crossovers also help identify buy signals. So a short-term moving average crossing above a longer-term moving average, 10 crossing above a 20, 3 above an 8, 20 above a 50, 50 above a 150, things like that. Those are much longer, slower signals, but crossovers help identify buy and sell signals as well. So, and what we also do with moving averages is determine broad market conditions. Is there more buying pressure or selling pressure in the broad market? Is the market healthy? Is it in an uptrend or a downtrend? And how strong is that trend? Also, moving averages serve as support and resistance. Is a stock near support or resistance? See if your stock is finding support in an uptrend or meeting resistance in a downtrend. Okay? And certain stocks behave differently and are more reactive to certain types of moving averages. You may look at a chart and put a 50-day moving average on the chart and say, oh my goodness, look at this. Price pulls back time after time after time, but it stops right at that 50, right at that 50. That 50-day moving average is a support level, is a support level for that stock. Or if you're in a downtrend and price, is hitting lower lows and lower highs, but it rallies and finds resistance at a 50-day moving average or at a 100-day moving average. It helps us identify, also buy and sell signals, because you can use support and resistance to buy and sell securities. And is price extended? So we want to determine if the price is overextended and far away from its mean average. That's what a moving average is. It's an average, right? And if you remember back to, middle school math, maybe early high school, the further something gets away from its average, the more likely it is to come back towards it. So you can identify an extended or an overbought, overextended price situation if price is so far away from, all of its moving averages. And we'll see some examples here in a moment. All right, so define and invest with the trend. Orange line is the institutional long 200-day simple moving average. The green line is the intermediate long 100-day moving average. The blue line is an institutional support and resistance. That's a 50-day simple moving average. The looks like it's a brown line is the medium short 20-day simple moving average. And then the short-term trends here, we're using a 3-day EMA and an 8-day EMA. And notice that when you get, to the shorter term moving averages, right? The moving averages that traders will more likely use, we then begin to use EMAs. Now you could put an EMA on a 20 as well. I think that works just fine. I don't think it makes much sense to apply a 50-day EMA or a 100-day EMA. It's not really the purpose, right? You're not really gaining any advantage really in doing that. But the shorter term look backs that you apply, you're really, if you're a trader, want to use those EMAs. Okay. And really, guys, what I would hope that you do moving forward, and this is what I do, I try to live above the longer term moving averages when I'm long, okay? Meaning, I don't mind trading pullbacks and short-term moving average crossovers, 3 crossing above the 8, for example, as long as price is in, an intermediate uptrend and a longer term uptrend, price being above the 50 or right at the 50 or above the 100 or right at the 100 or above the 20, I want to live there. That's where I want to do most of my long trading. Okay? Because as you can see, the short-term moving average crossovers, for in this case the 3 crossing above the 8, while in a long-term uptrend, produce much better and more reliable and profitable signals. The rallies are longer, the pullbacks are shorter lived within an underlying uptrend. Now when you get into an underlying downtrend, that's the total opposite. Okay? The rallies are shorter lived and the downdrafts are longer. Now don't get me wrong, there may be times where you could make some money during these short-term rallies within an underlying downtrend, but just know that that rally that you're trying to participate in is likely going to be short-lived, especially if price reaches the 20-day and fails to cross above it. Okay, remember that 200-day, excuse me. Remember the 200-day, that can serve as support. I mean, all moving averages can serve as support, but or resistance. But if price reaches that 200-day and you've taken advantage of what some call a dead cat bounce, right, within an underlying downtrend, be very careful managing that position. So what I hope what you concentrate on moving forward is when you're long and you're trying to trend trade using moving averages. And I get this from the pros. Larry Connors, for example, Charles Schaap. Those are two of the professional traders that we teach in our Trade Like a Pro course. Their techniques that we teach do just that. They look for pullbacks within an underlying uptrend and then buy those dips. Okay, now I'm not going to get into the mechanics of those systems. It's taught in the course. But I really bought into that concept. Because buying dips are difficult, right? It's easier said than done, but a dip in a downtrend, in an underlying downtrend, it's not a dip, it's just another wave down, right? So I want to see, going back here, I want to see higher highs and higher lows. I'm looking for buying opportunities at these intermediate term moving averages, the 50, the 100, making sure price is above the 20. Does that make sense to everybody? You're increasing your probability of a successful trade by, again, residing above the 200-day moving average, the 100-day moving average when you're bullish, and living below the 200 and the 100 if you're bearish. All right, just some general concepts there. What I want to teach you here now is a complete trading technique. Those were just some 30,000-foot overviews of how to use moving average, how to view moving averages, and really kind of just a little bit better of understanding them. Now let's talk about a complete trading system. It's called the Ema Squeeze. The 5, 8, and 13 Ema Squeeze swing trading strategy. So here's what we do. We look for a pullback or a quiet period where the 3 moving averages have squeezed together. They start to pull apart and then fan out, beginning to trend upward. Trust me, guys, don't worry, we're going to look at charts. All right, we like to lay out the system both ways. Put it on paper first so you can get an understanding and kind of visualize it in your head what it's supposed to look like. Then we'll apply it to chart examples. Using the slope of the 3 moving averages after a squeeze. So again, the squeeze is when, let's say, price has fallen, starts to flatten out, capitulate. The moving averages, the 3 moving averages, which have been sloping downward along with price, start to converge towards each other and squeeze together during that capitulation period. Then as price begins to rally, those 3 moving averages begin to fan apart and trend upward. That's what we look for. We look for that fanning out of those 3 moving averages after the squeeze. Using the slope of 3 moving averages after a squeeze, we can predict, there's that word again, if a significant trend change is underway and whether it is likely to continue. A strong upward move increases the probability of a successful trade. All right, so here are our buy rules. Our buy rules are The 5-day EMA has to be above the 8-day EMA. The 8-day EMA has to be above the 13-day EMA. Price also has to be above the 50-day simple moving average. Whether price first crosses above the 50-day simple moving average or lives above it, okay, and the price pullback and the ensuing squeeze of the three moving averages occur above the 50-day moving average already. Sometimes sometimes price will be below the 50, fall below the 50. You get that capitulation below the 50, and then price begins to rally, heads towards the 50. The three moving averages fan apart. But in that case, price has to cross above the 50. It has to go above the 50 for us to get a buy signal. SMA, Stephen, is a simple moving average. The relative timing also has to be trending higher as well. You're welcome. Relative timing is an indicator that we'll look at. It's a VectorVest proprietary indicator. It measures the stock's short-term price trend and momentum. It's on a 0 to 2 scale. When the indicator is above 1, that's good. Below 1 is bad. So we want to see that RT indicator trending higher over a minimum of 3 days. Essentially higher the day that we get our buy signal than it was 3 days ago. We want the overall market to be in an uptrend as well, and with this system we're going to use the DEW. The DEW is a VectorVest market timing signal. It's kind of like a middle of the road Goldilocks type of market timing signal. It's slower than our faster signals and faster than our slowest signal, kind of in the middle of the road there. It stands for the DEW stands for the detrended price oscillator, envelopes, and a weighted moving average. Okay. The sell rule, or your last line in the sand, is when the 5-day EMA closes below both the 8-day EMA and the 13-day EMA. That is your last line in the sand. Okay? There are opportunities to exit the position before that happens, and we'll go through a few of them, but that is your absolute last line in the sand. All right? So we're going to look at more charts here in a moment. Let's take a look. Let's take a look at kind of a situation that we'll see. Remember, there are the buy rules. So price, the pink line is the 50-day moving average. The green moving average here, that's the 5 EMA. The red is the 8 EMA. The blue is the 13-day EMA. So as price falls further and further below the 50-day moving average, what happens? Price stops, begins to rally, and what happens to those three moving averages? They squeeze together, don't they? Essentially, at one point or another, all three are going to touch. That squeeze is kind of your setup there. You're getting ready to enter the trade, but you wait. You have to wait. What do you have to wait for? You have to wait for two things. Number one, price has to go above the 50-day moving average. And then you also want to see the bands or the three moving averages fan apart. You can see that, and it's visual. It's visual. You visually see the three moving averages begin to fan apart. Price goes above the 50-day moving average. You get followed through the next day. There's your signal. There's your entry. Same situation here, same price and moving average scenario here that we're looking at on the right-hand chart, but now we've added RT to the bottom because that's important. We want the relative timing indicator to be rising as well. And that happened here as price rallied towards the 50-day moving average. Okay, pretty simple buy rules. All right, pretty simple buy rules. The sell rules are as follows, and the prudent exit criteria is when, again, the 5-day EMA closes below both the 8 and the 13. That is your prudent, that happened here, that is your prudent exit criteria. As you can see, guys, you know, you're going to leave some money on the table, okay? I mean, you're always going to leave some money on the table when you use moving averages. I'm sorry to say, but, you know, since they're lagging indicators, it's not a reversal signal, right? It's a trend change. When you follow trends, You leave money on the table when you enter, right? Because you're not getting in off of a bottom or off of a reversal, and you're going to leave and you're going to give money back as the stock price starts to fall from a new high, because you're not trading that reversal either. You're waiting for a true trend change. So here is the prudent sell, is when the 5-day EMA crosses below both the 8 and the 13. There are other faster or sooner opportunities to sell, and they're what we call warning signals. Warning signal number 1 is price rising, the moving average is sloping upward, but the relative timing indicator at the bottom begins to slope downward a little bit. Okay, it's not following along with price. That is an indication. So I said that relative timing measures short-term price trend and momentum. It can measure building momentum, but it can also measure weakening momentum. And when price rises and the indicator falls, that's just a textbook bearish divergence, warning signal. Okay. Another warning signal is when the gap in the bands just really begin to widen. The 5 EMA is really extended from the 50-day moving average. Price is really extended above the 5-day EMA. We talked about that earlier, about recognizing when price is overextended, when it's really pulling away from all your moving averages. I like using candlestick reversal signals as well to lock in profits. Okay. Bearish engulfings, bearish haramis, one black crows, dark cloud covers, hanging man patterns, things like that. I'll observe those patterns, especially in an overbought situation, and I got a sizable gain. I have no problem exiting positions on weakness if I see those reversal signals. So there are just different ways to exit the trade here, but let's focus though on the prudent approach. It's the easiest. It is the exit criteria that is less reliant on you. No offense to anybody out there, but we kind of get in our own way sometimes, right? Or we have trouble making decisions. Let's let the system make the decision for us and not have to worry necessarily. And look, once you get good at it and really familiar with managing these type of trades, then you can begin to maybe apply some of these other things. Let's just focus on the prudent approach and to exit when the 5 EMA closes below both the 8 and the 13. Okay, so here's an example. We'll look at some charts here. So in this area here, price below the 50-day moving average, falling. Okay, finds a bottom, capitulation, rally, the squeeze, the beginning of the fanning out, price rallying towards the 50-day moving average, the fanning out of the moving averages, price going above the 50, which is a must. We don't take the trade, guys, below the 50-day moving average, even if we see the fanning apart of the bands. You're going to see the fanning apart of the bands in a situation like this below the 50-day moving average, but we don't take the trade unless or until we see price close above the 50-day moving average. You could see during that time period relative timing was higher. When price goes above the 50-day moving average, we look at RT and make sure that at that time it's higher than it was 3 days ago. That's clearly the case. Okay, and that entry there resulted in about a 50% gain, because not until here, July, mid-July, end of July of 2020, doesn't matter the time frame, don't worry about the time frame. That was the first time that we saw the 5-period EMA close below both the 8 and the 13. It got close a few times, okay, but never crossed. The green line never closed below both the red and the blue lines, allowing you to stay in this trade. Now, if you were someone that maybe exited the position a little sooner, I don't blame you. That's a 25% gain here. So as you can see, the moving averages started to converge towards each other. I'm sure that there was maybe a bearish candlestick formation, or let me go back to a slide earlier. Another warning that I missed actually is the 5 and the 8-day EMAs squeezing together. You see that there? The green line converging and squeezing towards the red line. That happened a couple of times here, so that may have been a warning signal and you may have taken profits off the table. I'm not going to complain with a 25% gain in a couple of months. But again, we're just going to focus on the prudent approach, and that would have resulted or netted you a 50% gain. And notice what was happening too as the moving average began to squeeze together. Look at the divergence that we began to see, and we actually saw it a little bit sooner than that, right? Price continued to rise here, June, July of 2020, but look at the relative timing indicator. That was an early warning signal that although price was still rising and trending upward, that was an early warning signal telling us that, hey, you know what? We're not in a strengthening trend anymore. We're in a weakening trend. Very smart indicator relative timing is. Okay. Here's Trulieve, cannabis stock. I love cannabis stocks, long term. I really do. This is the Canadian Trulieve that trades on the Canadian market. We also in the U.S. have this company trading on the U.S. markets. But let's take a look at our entry back here. In this case, now this is July of 2020 as well. In this case, you can see the squeeze, but the squeeze occurred already and price was already above the 50-day moving average. All right, so that's good. We don't have to wait for price to cross above the 50-day moving average. You had your consolidation here. I don't know what happened beforehand, but you had that kind of that squeeze occur with the 3 moving averages, and then you could see the moving averages began to fan apart. Price began to run off of the 50-day moving average. Again, it's already above it, so that's easy. And there's your entry. Okay, July 13th at about 20 bucks. The moving average is fanning apart. That's the key. The relative timing indicator strengthening, also key. Add a bonus in there with volume starting to pick up, and there you go. You got a nice setup here for a nice trade. Price began to fall a little bit after we entered the trade. Has that ever happened to you? Right? Price begins to fall after you enter the trade, but the 5-day EMA never closes below both the 8 and the 13, allowing us to stay in the trade. Finally, it did here. The 5 closed below both the 8 and the 13. That's about a 33% gain there. Nice gain. Now, we did leave some money on the table. Don't get me wrong. Now, that right there, guys, so notice, remember, price pulling further and further away, right? Price is overextended. You don't even need to have moving averages on the chart really to recognize that, you know, price is really overextended. But the close on that green day there, well above the 5, well above all the moving averages here. The following day formed a bearish candlestick reversal pattern called a bearish harami. Follow through the next day. That was, I think, your earliest exit. Earliest exit. Your next exit, or I know I keep saying I'm going to focus on the prudent way, but let me just go through the different ways. That was your earliest exit, the 5 EMA converging towards the 8, and they start to touch. That was another warning signal there. Okay, and then finally, when the 5 closes below both the 8 and the 13, there's your exit. But there were opportunities beforehand. So you exit, you stay out, you stay out, you stay out. There's no entry there. Price falls below the 50, you get the squeeze below the 50, the rally towards the 50, the close above the 50, the bands begin to rise and fan apart. There's your next entry. Relative timing trending higher. Let's add a nice bonus with volume there as well. Here would have resulted in a 48% gain to the hard right edge. To the hard right edge. All right, here's Sleep Number. This is a US stock. We're trading on the US market. Here's your entry here back in September of 2020. Okay, no on-balance volume used here at all. We're just using these signals and these indicators as we go through. Okay, so Javier is asking, do you use a stop or a target with the strategy? Nope, you do not. There's the squeeze. Price is already above the 50-day moving average. There's the squeeze. I mean, you can hardly differentiate or decipher, right, which moving average is which. where's the 5, where's the 8, where's the 13? You can't even tell because they're hugging each other, right? They're right on top of each other. But then you can clearly see when they begin to separate. RT trending higher, price pulling away from the 50-day moving average. There's your entry. Your exit, in terms of the prudent exit, you didn't get it. 52% gain here. Now this is a big, scary, bearish, engulfing candlestick. Okay, so you may have panicked and I don't want to say panicked, but you may have taken your gains off the table here somewhere. Okay, now you didn't quite get follow through, which I always look for, by the way. If I look at a bearish candlestick formation, I look for follow through the next day. We never got it. Okay, we never got follow through the next day. So theoretically, you could have stayed in this trade. If you wanted to exit somewhere here, that's halfway. That's a 25% gain. I wouldn't blame you. Louisiana Pack, what a great run. Stock's starting to rally a little bit. I actually looked at this yesterday after one of the sessions that Stan and I did. It's starting to rally again. It actually just broke a downtrend. Let's look at LPX on a real-time chart after I go through this example, okay? There's your entry, January 21st, 2021. There's your squeeze. I mean, I can't see which moving average is which. They begin to fan apart. The relative timing indicator begins to run. Volume on that day right at the average, which is good. And there's your entry. You just see the fanning apart of the three moving averages. Never got a sell signal. I know it looks that way, but the 5 never closed below both the 8 and the 13 in this area here. Now you were a little underwater. And where did price stop, by the way? Where did it stop? Right at the 50-day moving average. Nice support there, right? Price began to rally. You were able to stay in the trade. 81% gain. Okay? Let's look at a real-time chart of LPX. Okay? So I said it's rallying a little bit recently, right? It's broken the downtrend. Here's my downtrend line. Lower high, lower low, lower high, lower low. That extended downtrend line that I drew, broken. Right in this area here. Okay, but are we setting up for an EMA squeeze currently as of the hard right edge? Well, let's see. Let me take off. Well, first off, price is above the 50. The green line, by the way, I'm sorry. The green line is the 50-day moving average. The orange line is the 5-day. The red line is the 8-day. The blue line is the 13-day EMAs. I'll zoom in so we can see it a little closer. We know that price is above the 50-day moving average, so I could take price off. Let me take the trend line off as well. There's the squeeze. There's your fanning out. Is relative timing trending higher? Absolutely. Okay. Is this a setup? Is this an EMA squeeze setup? It absolutely is. In fact, I probably would have taken this trade today because as of yesterday's close, price closed above the 50, and even as of yesterday's close, the moving averages were fanning apart. So today would have been a really good day to take the trade. Not too late because I think the trend is just picking up again. Okay. Kinross Gold trades on both the U.S. and the Canadian exchanges. So let me go back here. Okay. Here's your buy signal. Also, the buy rating, the VectorVest buy rating, confirms that the potential that we're in a potential sustained uptrend. In this area here, here's price falling below the 50, kind of bouncing, oscillating above and below the 50-day moving average, right? You could see the squeeze. The relative timing indicator was hitting higher lows, so that's good. That confirms that momentum is changing. Price begins to, it crosses above the 50-day moving average, starts to pull it away from the 50-day moving average. The important part here, right? Moving averages already have squeezed. The consolidation or the quiet period is ending. The fast EMA above the medium and the medium above the slow, and all three are starting to trend higher. There's your buy signal. This would have resulted in about a 33% gain, okay, when the 5 goes below both the 8 and the 13. Okay, price pulls back, pulls back, pulls back, you exit, price continues to fall, stays above the 50, you get that quiet period, or that, capitulation above the 50, the EMAs begin to squeeze, the stock rallies, pulls away from the 50, the EMAs start to separate. There's your entry, there's your re-entry. Okay, there's your re-entry. This would have resulted in about a 27% gain because the 5 closes below both the 8 and the 13 in this area here. Okay. Now, let me go back. Why didn't we enter the trade again in this area? So stock pulls back, stays above the 50, you get the quiet period, right? You get the quiet period, and then price starts to run away from the 50, and you do get the bands pulling apart. Can anybody see why we didn't enter the trade again in this area? Now this is a tricky question. If you notice what's on the chart, maybe you can answer. I'll answer it for you. Mel says RT is flat. Not really. Not really. It's because it was a tricky question, because we were in a DEW down situation during that time. These red and green arrows, those are our DEW up and down signals. So remember, we only want to place trades during a DEW up signal and not place them during a down signal. So that's why we didn't take that trade there, because the DEW signal was down. Okay. Here's another example. Well, W-E-L-L. There's your quiet period. There's your run. There's your rally above the 50. We don't have to wait for price to close above the 50 because it's already above it. Starts to rally away from the 50. The EMAs start to separate. The RT is trending higher. Volume is spiking. These are all recipes, guys, for a high probability trade. You never got an exit signal. The 5-period EMA, which again is the green, never closed below both the 8 and the 13 in this area here. So you could have stayed in the trade. You got your quiet period though, and the squeeze of the moving average, and then separating again. Now, if you're someone that is willing to or likes to average up, right? You can do that at that point. You can buy more shares. Okay, sure, you're raising your cost basis, but that's fine if you're buying a rising stock. Okay, so you could have bought more there, leveraged up a little bit. Okay, stock begins to rally, you get another squeeze or quiet period, you get another re-entry. Now these are all not only opportunities to buy more if you bought it earlier back here, or if you didn't buy it back here, these are all entries. New entry, if you didn't buy it here, another new entry. So these are all opportunities here to buy as the stock rises, pulls back. You're in an intermediate term uptrend because price is above the 50-day moving average. Remember, we laid out that the 50-day moving average is that intermediate term moving average. Javier, I'm not going to go all the way back to the buy rules slide. I'm going to give you guys these slides pretty soon here, and you're going to get today's recording so you can review it, of course. Okay. So the hardest, most time-consuming part of swing trading is finding the right stocks with the correct setup early in the trend. All right. 3 ways to do that. You can use the stock viewer within VectorVest. You can use a watch list viewer, which I love. Just creating a watch list of my own, or using the S&P 500, the TSX. If you're in Canada, any of the watch list in your respective programs. I like using Unisearch. That's my preferred method. It allows us to scan the database to find stocks that meet certain criteria. Okay, in your slides, these are the slides that I'm going to give you. Stan has been kind enough to provide you guys with the search parameters to find the Ema Squeeze Setup. Okay, so let's just go through them quick. 5-day EMA crossed above the 8 sometime in the past 5 days. We want both moving averages moving up. The 8-day EMA is crossed above the 13 in the past 5 days. We want both of those moving averages moving up. So that right there, when you run the search, it finds the fanning action of those moving averages. The relative timing we want to be higher than it was 3 days ago. And just some simple price and volume parameters here. You can change those. I don't mind buying stocks above $1. If you don't like buying stocks above or below 5, you change that to 5. You can increase the minimum volume parameter as well. And this one is too important. Stock price 1-day moving average, which is price, is currently above the 50. Has to be above the 50, right? Just in the last 1 day. Now, the ability to run this scan, it requires either our real-time subscription, VectorVest Premium, or our Pro Trader add-on module. Okay, so if you don't have VectorVest Premium, which is our real-time data, and you have end of day or the intraday data feed, and you have our Pro Trader and you bought our Pro Trader add-on module, okay, you're able to run this scan. No, so you don't make the trade during the day if, let's say, okay, so if price opens below the 50-day moving average, but crosses above it during the day, no, we don't take the trade there. We wait for the price to close above the 50-day moving average. Then I will enter the trade the following day if price follows through. The same goes for exiting. I wait for the 5-day EMA to close below both the 8 and the 13, and then I will exit the following day on weakness. I'm not going to exit intraday because on an intraday basis, the 5 goes below both the 8 and the 13. I'm waiting for closing values. Okay, it says if price is already above the 50-day, has been above the 50-day for days, and we are just waiting for the 5 to go above, are we waiting to enter after the close? Yes. You wait for the values to close. You're not in any of these situations, these crossovers. You're not entering, intraday. You're waiting for the price to close. Review the situation. Is price above the 50? Are the moving averages fanning apart? Is relative timing moving higher? If the answer to all those questions are yes, then you enter the trade the following day. Good, Ben? Ben says thank you. You're much clearer. Good. All right, so key concepts, guys, what we talked about. Let's use history to give you some confidence. Using graphs, you can visually see the best setups for entering a trade and when you need to prepare to exit as well. Oh, look at that. There are the buy rules. I'm sorry, I didn't think that this slide was coming, Javier, but here are the buy rules. DEW, market timing signal, needs to be up. The price has to be above the 50-day moving average. The 5 has to be greater than the 8-day EMA. The 8 has to be greater than the 13. RT has to be trending higher as well. Sell rules, the prudent approach, 5-day EMA closes below both the, see, and it actually says it there, closes below both the 8 and the 13. Then the next day, if the stock continues to move lower, that's your exit. And 9:45, 10 o'clock in the morning Eastern time is when I will look to exit on a situation like that. Okay, so what we covered today, just 5 key ways to use moving averages. I talked about how they can be used for support and resistance, help us identify trend changes, strengthening trends, weakening trends, an overextended situation. So we learned just different ways to use moving averages. The Ema Squeeze trading strategy, guys, we left you with this. It's a complete system to pinpoint high probability entry and exit signals. There's no gray area, I think. I know there's questions. I know you guys have questions regarding it, but once you understand it and really how simple it is, it's cut and dry. It's cut and dry. Sure, it's a cherry picking process where you really want to see the moving averages begin to fan apart, but I mean, it's not really debatable, right? You can't argue for all that long a period of time saying, nah, are they separating? Are they fanning? I don't think so. Well, maybe they are. I don't think they are. It's really a quick little conversation with yourself. Are they fanning? Yes, they're fanning. Okay, and that's really the important part there, is that fanning, that separating of the moving averages, making sure price is above the 50, RT is trending higher. It's a pretty simple system, not using all too many indicators. All right. So I did talk earlier about how I'd mentioned, a new course, a new launch, a course called Mastering Moving Averages. Stan and I teach it. The regular price for the course, I'll go through everything, guys, in a moment, but the regular price of the course is $595. For you folks here today, whether you're joining us on YouTube or GoToMeeting, $295. I'm going to ask Stan, if he doesn't mind, to type in the address that you guys see there, www.vectorvest.com/MA. You can call our office, but I would rather you just click on the link that Stan's about to put in the chat box. $295, that price is available for a limited time and only for you folks here that are webinar attendees, all right? You will get immediate access to all the course materials immediately at the time of purchase, okay? We go through the VectorVest system. There's a talk on understanding moving averages, trading with a single moving average, trading crossovers, moving averages as support and resistance, the Ema Squeeze trading strategy, again, for both long and short situations. Okay, we only went through the buy signals today. You can use that system for shorting stocks as well. Multiple moving average trading system. It's called the Guppy. Fantastic. I love it. It's a great trading system. Dr. Barbara Starr, Surfing the Reversal Wave. Dr. Barbara Starr is an author. She's a technical analyst. She's done a lot of work with us over the years. She's developed a system using Bollinger Bands called Surfing the Reversal Waves, and also the Midas Touch system for both swing and long-term investing. Okay. We're going to give you a bonus trading system as well. Another complete trading system to identify buy and sell signals called Trading High-Low Moving Average Bands. Okay, so bonus offers, here's what you get. You're going to get 6 live mastery support sessions every Wednesday beginning on September 1st, and we'll meet at 2 p.m. Eastern Time. Now, I said that as soon as you register, thank you, Stan, for putting that link in there. As soon as you register for the course, you will get pretty close to immediate access of the VectorVest University and all the course material. You can go in there right now. It's like Netflix. Just watch, binge watch as much content as you want before our first live mastery support session on September 1st. Okay? You will also notice that there are other mastery sessions in there, recorded sessions. Those are the ones that Stan and I did about 3 months back. You can watch those old ones as well. Those old ones will be replaced with the new ones that we do here. And that's always the case. In 3 months from now, if Stan and I do another Mastering Moving Averages course, the live sessions, the live mastery sessions that we do then will replace the ones that we do now for us. What I love about these mastery sessions is they review the content that is covered in the module, okay? But we'll also look at the real market on those days and identify current setups. So, for example, the EMA squeeze, right? In the core modules, what's taught to you guys are historical examples. Well, in the mastery sessions, we're going to say, all right, let's take what we learned and apply it to the real market and see if we can find some real-time examples. Okay? Current subscribers, if you don't already have our VectorVest Premium real-time program, you will get access to it for 60 days. That's the US market. Okay? You'll get intraday Canada as well. All right, so you're going to get, if you don't already have VectorVest Premium, if you already have VectorVest Premium, you don't get an additional 60 days access to it. This is for those people who, these are for those customers or clients who don't have the real time and are going to get it for the duration of the course. It includes all of the tools that we need or that we'll use during the course. Okay? Non-subscribers, if you're not a VectorVest subscriber, you're going to get that same free access for 60 days to the VectorVest program, including our US real-time program. And that US real-time premium program includes, again, all the tools, Pro Trader, the auto timer that we will use for the course. okay? And then finally, or not finally, I talked about the Pro Trader searches. What are the Pro Trader searches? They are technical analysis scanning. It's a technical analysis scanning tool. It helps us scan for moving averages, for one. I mean, it's a moving average course, right? So we want an easy way to find trades as opposed to cherry picking all day, every day, right? By the way, guys, I put the slides in there. You should see a PDF in your handout section of your GoToMeeting control panel that says Mastering Moving Averages. It is a PDF. You should have access to it and be able to open it now. If you're joining us via YouTube, you will be sent a copy. Okay? So the Pro Trader tool, the Pro Trader add-on module, which comes included, you get access for 60 days. It includes moving average crossovers, MACD, Bollinger Band, stochastic support and resistance, RSI, DPO. There's a lot of different technical indicators that you can search for. We are going to focus, of course, on scanning for moving averages. Okay, and then the auto timer as well, which adds market timing to your back test or to your portfolio. Okay, here are the lessons. 10 full lessons. I know we're doing 6 mastery sessions, but there are 10 lessons. So what does that mean? That means that in a given mastery session, there may be 2 lessons bunched into that mastery session. Okay, so 10 full lessons, 6 live mastery support sessions. Those sessions again begin on September 1st. We meet at 2 p.m. Eastern Time. They will be recorded, uploaded to the university. We say within 24 hours. Sometimes I can get it done that night, sometimes I can't, but I will upload it to the university without question the next day. But here are the dates again for those mastery support sessions. Just a couple of testimonials, guys. Stan and I have done this course a couple of times. Rob sent Stan an email not too long after the course was over. He said, "Thank you once again for a great presentation on the multiple moving averages. Your Mastering Moving Averages course, as always, is well documented and has a wealth of information. I really like the 20-day moving average channel search." That's something that Rob took away from the course. I think the MMA course should be a fundamental course for new and experienced VectorVest users. It has been very educational. I look forward to using the setup/searches of the program to advance my investing success. Thanks again. By the way, in the VectorVest University, in the resources section, once you get in, you will see screenshots of a number of different scans. We are providing you guys with scans to help find the techniques or the setups that we'll teach during the course. So there's an EMA scan, there's a Guppy scan, there's the 20-day scan, 20-day moving average scan. The parameters, screenshots of the parameters are in the university, and Stan has also been kind enough to record little videos on how to build the searches. They won't be inserted into your programs, but we give very clear instructions, thorough instructions on how to build the scans. And again, the parameters, the screenshots of the parameters are in the VectorVest University in the resources section. Warren G. I made a stupid joke yesterday about, no, not the rapper. Warren G is a customer of ours. But he wrote to Stan, he said, "After taking the MMA course, I am now able to better determine entry and exit points." And he lays out the difference in his performance, in his portfolio performance, using some of the different techniques that we teach. Okay, and you can go on and read it there. His numbers just skyrocketed, both production, both performance, gain, portfolio gain, and number of winning trades as well. Okay, with each of the systems that we teach you. Okay, Ben, I'm going to go back a couple slides. There are the dates for the live mastery sessions. Okay, those are the dates for the live mastery sessions. So if you take the course again, if you've taken the course already and you want to retake it, you will be invited to these live sessions again. Okay, and those are the dates. The dates are also in the in your PDF there in your handout section. Okay, so of your GoToMeeting control panel. Okay, you're welcome, Ben. All right, thank you, Valentinas. Thank you, Valentina says, thank you very much. Very useful. Awesome. Glad you guys got something out of this. There are our email addresses. Stan.Heller, again, it's in the slides, at VectorVest.ca, jerryd@VectorVest.com. If you have any questions, guys, moving forward, anything that I taught you guys here today, you want to shoot me or Stan an email, you can do that. During the course, you know, Stan and I are your point people. Right? We're your instructors, we're your coaches. If you have any questions about anything during the course, after the course, doesn't matter. You know, you have our email address. You don't have to email support to have any questions regarding the course answered. Okay? Ben says, what is the rule to confirm if RT is trending higher? Higher that day than it was 3 days ago. So if you recognize that price is above the 50 and the 3 moving averages are fanning apart, on that day is the RT indicator higher than it was 3 days ago. It doesn't have to be higher every single day, higher than it was 3 days ago. Okay? Good. Ben says, got it. Awesome. Good. You're welcome. All right, guys, I enjoyed today. I hope you guys learned something, learned a little bit about moving averages. If you want to learn more, this is a very comprehensive, thorough course. I mean, there's not a stone left unturned, really, when it comes to moving averages. And, you know, Stan does a fantastic job with those modules, and the mastery sessions are great. So if you want to learn more about moving averages, like Warren G said, or what was it, Bob, they really are the foundation for swing trading. All right, there's so many different indicators that use moving averages. So to understand fully how to use moving averages to swing trade and to identify trend changes, I think for any trader is a must. All right, so if you want to learn more, $295 for the course. It includes everything that I talked about here today. In my opinion, it's a no-brainer. Ben says, looking forward to taking your course. Awesome, Ben. All right, guys. Talk to you everybody soon. We start in about 3 weeks. All right, September 1st is our first mastery session. Once you get into the university, you can watch as many modules as you want. All right, up until that point. It's all on demand and accessible immediately. All right, take care, everybody. Have a great rest of your day. Have a good weekend, and we'll see everybody soon. Take care, folks.